Hi, good afternoon, everyone. Can everyone hear me? All right, welcome to our the final traders talk for the year. Okay, I'm Elkie here with you guys today. Uh, yep. Okay, so for today we're gonna have our monthly traders talk, whereby we will explore what we are expecting for the month of December. Okay, yeah. So I believe it's a little bit tough start for the month, whereby we can see, including today, we have four down sections, four sections in red, out of 6 days. Okay, for 4 days in red out of 6 days for the past 6 days. Okay, yeah. So things are a little bit difficult, but let's look what are the things that we are expecting that might happen, or things that we really want to pay attention, see, and hopefully we were able to get through this month in a more in a better manner. All right, okay. So good afternoon, everyone. Welcome to our December monthly traders talks. Okay, so my name is Elki, and I'm your speaker for today. All right, okay. So this is our 12th, the very last one, and the 12th traders talks for this year. And as usual, we for throughout this is the talk that we have it by early every month. Okay, usually it's the first Monday of the month, whereby we will do some review on what happened for the last month, and then we will be highlighting some of the things, some of the issues, opportunities that worth looking at for the month. Okay, so for this month, as usual, we'll start with reviewing some of what happened in the month of November. Okay, then we'll move into key events. Of course, we know that for this month, the key events, we cannot escape. It will be the Fed's Federal Reserve interest rate decisions. Okay, which is gonna happen this week, and also the year-end window dressing that everyone has been highly anticipated. Okay, yeah. So we're gonna put this up together with the seasonality, and then that will help us to wrap up for the whole sessions. Okay, yeah. So first we're gonna start with looking at what happened in the month of November. Okay, to be honest, November, it wasn't too encouraging month, whereby I believe many who have been actively trading in the markets, if you haven't been focused in certain sectors, but you have been hitting around, especially for traders who have been actively engaging in higher risk or more active stocks. Okay, November this year, November, it wasn't really it wasn't an easy month. Okay, whereby we can see that by historically, November is more towards a flattish, um, a month that whereby we are seeing more pullback after a, a better performance in the month of October. Okay, and November we usually see some flattish retracement, preparing for the rally in the month of December. Okay, but this year the thing has been worse. Okay, we can see small cap continuing with the decline from the month of October. Okay, October, small cap had a reversal instead of being a retracement. It's the selling actually prolonged into the month of November, and then took a quicker drop. Okay, to a more a deeper drop actually. Okay, and we can see there are a few industry sectors that has been quite severely affected, whereby technology will be the worst performance in the month of November. Okay, then followed by utilities and also healthcare. Okay, yeah. So we can see from the on the other sides, on the gainer side. So okay, financial services, properties, and plantations. These are the three sectors that outperform the other indexes. other sectors, okay, other industry, whereby the gains are much lesser compared to how much the market drop. Okay, so net, if we look into the month of November, it wasn't a pleasant month, okay, where many, especially us who has been engaging on more towards smaller cap counters, we feel the pain, okay, from the drop in some of the more speculative, more trading oriented kind of stocks. Okay, yeah. So why financial services, properties, plantations able to outperform the rest? Okay, so if we look into some of these sectors, okay, we know that November is earnings month, okay, whereby there are a huge piles of numbers of earnings being released, okay, and financial services as one of the more resilient sector, okay, banks still able to posit very stable loan growth, stable earnings, and some of them like CMB, like RHB, they actually even able to announce better growth, better results. So all this actually have helped and lifted the sector, okay, to be the top performance in the month of November. Okay. Meanwhile, on the other hand, for properties wise, okay, if you look through all the property counters, okay, you don't see every single property counters going up or rallying in the month of November. Okay, for the gain in the property sectors, it's actually mainly driven by selected counters. Okay, and one of the most significant ones will be IOI properties. Okay, yeah, so its profits actually, its profit is extraordinary, whereby the profit jumped ninefold, okay, due to one-off measurement gains from its recent Singapore acquisitions, okay, and also there are stories, there are positive expectation on the kind of company, whereby market is expecting its coming rates listing in the month in the year 2026. So with more encouraging outlook, okay, positive catalyst ahead, okay, with strong earnings that actually driven IOI properties to be the top performing in the sector, in the property sector. Okay, so properties wise is, while other properties still stable and some of them they rebounded like EcoWorld, like Matrix, okay, but IOI properties is one of its kind that really driven up and lifted the sector. Okay, on the other hand, okay, we also have plantations with actually we can see, if you have been following us for the October monthly trader stocks, we had been emphasizing on plantation sectors, plantation counters, okay, and most of them they able to beat earnings expectations, okay, with a firmer CPO price. CPO price has been solid and strong, okay, especially we have been talking about the CPO prices has been move higher. It moved higher, and that contributed to a better earnings announced in the month of November. So that's why in the month of November we can see that plantations, despite there's a weaker CPO price, despite that some announced some worries, concerns on the plantation lands issue in Indonesia, okay, we are still seeing a number of plantation companies able to perform in the month of November. Okay, so these are some of the reasons that actually has been lifted these three industry so well, okay, that they able to outperform the rest in the month of November. Okay, so you might want to ask, hey, okay, so since we enter the last month of the year, is these three sectors are still worth looking at it, or what? Okay, or should I look at others? Okay, so if we look into some of the this trade index, okay, we can see that Bursa Finance Index, okay, after the recent rally, Okay, after the recent rally, this highlighted box is the November month. Okay, we can see November month, it has been gradually and steadily move higher, and we had a spike on the first 2 days of the month of December. Okay, whereby um, on the removal of the uncertainties from Sabah elections, okay, we can see that the hot money, when it come into the markets looking for something to buy, bank stocks are the one that turns out to be their prime selections, their first choice. Okay, so we can see when the market turns a little bit more positive. Okay, bank stocks on the first 2 days of this month are the one that really benefits a lot from it. Okay, yeah. So if we look into it with this rally, okay, it actually drive up the finance index into overbought territory, and right now is, I would say that it is a healthy retracement. Okay, yeah. So if you ask me whether finance index still worth to look at it or not, and my answer will definitely be yes. Okay, yeah. So what we want to look into it is look for the finance index to find a support near 18,600 to 18,800 levels, which right now is coming near to. Okay, and anytime if we're seeing it able to more stabilize around this area, then we might want to consider if this is a good timing for us to buy or not. Okay, and coupled with the December outlook that I'm going to share later, then that could probably help you to have a better idea whether when it comes to 18,600 to 700, whether this is the time for you to get in some. All right, okay, yeah. So as for the properties index wise, we can see that the property index it hit the 1080 high. Okay, and immediately we are seeing some of the shooting stars, some of the long tail, some of the rejections, and the upside isn't as solid as what we are seeing in finance index just now. Okay, so in this juncture, what we are seeing is a potential of a further weakening in the property index. Okay, especially if you look into IL properties share price, if there's any softening and there's any signal of retracement pullback in the share price, and that could drive the property index back into a more neutral level, maybe somewhere around like 1040 around this area. Okay, especially we know that Bursa property, the rise, the rally in Bursa properties is more towards driven by select counter. So in this case, we shouldn't be too positive or too aggressive on property stocks. Okay, yeah, despite that the index has been performing for the month of November. Okay, on the other hand, if we look into Bursa Plantation Index, we can see that after the rally since you can see the recent low is during the early of August, and Bursa Plantations has been rallying and has been trading higher and hit the high somewhere around like mid or near to the end of November. Okay, yeah. In this case, I would believe that it could be a time for Bursa Plantations to take a break. Okay, to take a break and make a good healthy retracement as of right now. And that might come back to somewhere around 700 level. So you can see I have a line over here. This is a potential support levels. Okay, so there could be more upsides, more downside. Sorry, for Bursa Plantation stocks, and that we would really want to carefully handle if we are holding any plantation stocks in our portfolio. Okay, yeah. So if we look into the overall markets, okay, overall market for the FBML, FBM KLCI, the blue chips, our local benchmark blue chips index, we can see that since we had the rejection in early October, okay, the selling down from 1660, we hasn't been able to break above the resistance of 1640 back to retest the upper level again. Okay, no doubt if we look look through the whole structure, the whole charts wise, we are still at the upper sides, okay, of the chart, whereby if you still remember earlier of this year during the April, when we have tariff, all this thing came in, we had our KLCI drop all the way until 1400s, and then the index has been making really great efforts trying to come back, okay, until recent achieving the high in the early October. Okay, so I would say that after this long rally, this long journey, okay, this is the time whereby market is actually taking a breath, okay, resting from the rally, okay, and as long we are seeing the FBM KLCI is holding above 1585, okay, 1585 to 1600 levels, okay, I would still see that the upside, it will be likely to remain. Okay, yeah, so this just come in line whereby we are seeing the 200 moving average is coming into the area. Okay, so reading the markets, so ahead is we are likely to see the continuation supports around this level, and as it comes to if you are trading really short term, okay, anytime it able to hold a bit more stronger or more solid near the 1620, pressuring to 1630, 1640 area, okay, meaning it trades into this area 1620 to 1640, then that's the time that we might see a change in the trend, or even the breakout from this consolidation area 1600 to 1640. Okay, yeah, so although we are really feeling that the market breath to be really a little bit weak and a little bit bearish, okay, from the chart wise, I think that we should still continue to hold hopes, and still continue to look for good counters, strong fundamental counters, and treat it as a potentially opportunity for us to do some bargain hunting. But of course, in this juncture, we really want to be a little bit more flexible, whereby if you are buying, let's say today is near the 1600 levels, I really want to make into, like, let's say if I'm buying bank stocks like Maybank or Public Bank, okay, I really want to make it like break it down into like 2 or 3 entries, whereby each entries it could be 10 cents, 15 cents apart, okay, so that with this averaging method I can get a better price. And also whenever if it rebounds near to the 1640, I might really want to let go some, okay, just in case that this area, like early like on last Monday or Tuesday when it rallied, when the share price rallied, if I didn't let go, and then the profits, it will just faded, and we will just back to square one. Okay, so at this juncture before the breakout, we really want to see profits, take profits, and anytime if it really breaks above 1640 area, then that's the time that for all these stocks that I'm buying during the bargain hunting, I might really want to hold a bit longer, okay, to see the potential upside to retest the 1675 to 1680 level, okay, the resistance. Okay, as for the small cap, okay, we are actually seeing that the small cap is still going on the downtrend. Okay, it's still going on a downtrend, but one good thing is we are seeing a potential bullish divergence forming. Okay, it's yet to form. Okay, but we can see that throughout the retracement, okay, the stochastic has been trending lower with a lower low. Okay, but we are seeing the buying interest to pick up right over here as we enter the month of December. Okay, so it might continue to pressure slightly lower. Okay, but we are from there we will be seeing a bullish divergence, and anytime the rebound that happens over here, potentially breaking above into 1600 levels, that could be an early signal of the rebound in the month of for the markets in the month of December. Okay, yeah, or even entering January. Okay, seasonally we know that the month of December, the month of January, they are those the performing months. Okay, um that's why my tone is slightly more bullish. Okay, right over here, but of of course there will be exceptional. Okay, and Santa Claus Rally is something that can works for us to benchmark and set our expectation, which I'm gonna share with you all later. Okay, yeah. So if we look into commodities wise, okay, for the commodities at this point, we are seeing that crude palm oil, the CPO, is trading more towards hovering between 4,000 and 4,600 levels. Okay, 4,600 levels. We can see that it's below the 20 days moving average. There are resistance along the 20 days moving average, and another resistance is on the way. Okay, yeah. So so if the CPO price continue to remain pressured, of course, we might see the upcoming earnings for the plantations. It could be weaker QOQ. Okay, yeah. Even though it might still remain stronger compared to YOY. Okay, but for palm oil wise, the chances of it will hold above 4100 levels or 4000 levels and start trending higher, the chances are high, whereby if we look into the seasonality chart of FCPO that I shared during our last sections, okay, it's usually bullish during this period of time because we will have production cuts, lower production figure, and also coupled with recent floods that happening, the monsoon season coming in, hitting our regions. Okay, that could really affect the production for the CPO and hence drive up the CPO prices. Okay, yeah. So in that sense, okay, we might want to monitor how strong the pump price can go, and that would help us to set our expectation for the plantations company earnings in the month of February. Okay, yeah. And for the Brent crude oil, okay, we can see Brent crude oil uh, in the view of a weaker economy outlook. Okay, oil hasn't been performing too well this year. Okay, we can see that, especially after it broke below the 70 level marks, which is very critical. It's the multiple support multiple times tested support, and this year we had it broken, and we hasn't been seeing it able to hold above the 70 level marks. Wow. Okay, instead we are seeing that it keep on testing the 59, and then even though we are seeing more towards bottoming up patterns right over here. Okay, uh, as long the oil price it maintains below 66 bucks, the level of 66 for the Brent. Okay, I would still be very cautious and also carefully calling a buy into oil, oil price, or even any energy related stocks. Okay, so you can see that's why throughout this year, for our money trader stocks, there are many times whereby our seasonality call for the month, the topic is energy. Okay, but if you look back every single videos, every single sections of it, okay, the probability of energy cost to energy stocks to outperform this year is like really weak. Okay, and if you have been trading actively throughout the whole year, you can see that there are not many times that oil and gas stocks has been performing and or even ranked into the top performers this year. Okay, and mainly all of this is because it dragged by a weaker oil price and also the ongoing dispute between Petros and Petronas. Okay, yeah. So although there are a number of good fundamentals, strong, solid fundamentals, oil and gas counters like Dayang, all this still trading, hovering around going on segway. Okay, I would say that until we are having these two key matter being resolved. No, otherwise, energy stocks is something that I might really want to avoid for the moment. Okay, yeah. So that will be pretty much the what happened in the month of November, and also the recap of what happened in November, and the view of the indexes, the commodities, all these key commodities for Malaysia. Okay, so as a recap, we can see that small cap and also FPM KLCI, they are still going on a retracement or consolidations, potentially hitting the supports. Okay, hence we really want to look for any bullish signals with increased volume to as a hint, as an early signal for a potential market rebound in the month of December, or even going into January, okay, next year. Okay, yeah. So will this Fed's meeting, okay, will be this highly anticipated interest rate cuts that gonna happen this week gonna be the reason pushing it up? Okay, yeah. So if we look into this upcoming Fed's Federal Reserve meeting, okay, it's actually quite one of its kind, whereby during early of November, actually the market isn't expecting the cuts. Okay, to be honest, per while during the time when it comes to the end of October, or even by during end of October, Powell actually hinted that there could be no additional cuts anymore, no more further easing in the for the month of December. Okay, however, its close ally, John Williams, actually came out and mentioned on the 22nd of November, okay, that he see room for a further adjustment, and mainly this is due to a potentially weakness in the labor market, especially after the US government shut down for such a long time, and that actually creates some worries, and also it creates more downside for the US economy. Okay, yeah. So instead of the a 45% rate cuts anticipations, okay, that actually boosted up to 65% immediately after this speech by John Williams. Okay, in John Williams. Okay, in the late November. Okay, yeah. And as of today, if we look into the CME Fed Watch, okay, yeah, okay, we can see the probability, instead of 60 somethings, it actually been lifted up all the way to 88.4% for a 25 basis point reductions. Okay, so right now market has largely priced in for a cut. Okay, and many times when this happens, the question is no longer whether if there is any cuts. Okay, it will be more focused on if this is a 25 basis point cut or a 50 point cuts. Okay, and in this kind of event, okay, the chances of a cut is very high. Why do I say so? It's not just because markets, it's just not because it's 88%, okay, but just because market has been largely priced in for most of the most of the traders, most of the markets funds, they have been pricing in for this movement. Okay, imagine if Fed doesn't deliver the cuts, what will happen to the markets? It will create extremely volatile markets on that day. Okay, if the cuts never happen, because everyone have to unwind their positions and potentially go into an extreme way. Okay, into opposite sides. Okay, that would create the market chaos. Okay, and I would think that Feds wouldn't want that to happen. Okay, so at this juncture, that's the reason why many times we are seeing when there is a highly anticipated figure or decisions by the governments or by the central banks. Okay, many times it will happen in line with what's the market expecting. Okay, all this is just to keep the stability of the markets and avoids the chaos. Okay, so since we right now we assume that this 25 basis point gonna go through. Okay, and what does that mean to us? Okay, so if a further rate cuts, if we are seeing a further rate cuts, that would actually means a weaker US dollar. The immediate impact that we're going to see is definitely a weaker US dollar and a further strengthening in our ringgit Malaysia. Okay, and not only that, with stronger ringgit Malaysia, that actually could attract foreign funds coming back to Malaysia and also increase the interest into some for all these foreign funds into some of these interest rate sensitive counters or high dividend counters stocks that we are looking at it. Okay, yeah, because when all this when it's cheaper for the it's cheaper for the borrowing. Okay, when the borrowing cost is cheaper, so we are seeing more money, more funds market all this seeing more monetary funds into the markets, and some of this fund will have to go will actually attracted to go into emerging funds which can produce a higher yield, a higher returns. Okay, yeah. So let's say for all these foreign funds to come into our Malaysian markets, okay, it will focus some part of it. It will focus on some of all these high dividends counters, especially those that are able to pay more than what they are pay more than the borrowing costs. Okay, so basically they will be borrowing from the US. Okay, let's say at 3.75%, and then they will buy into Malaysian stocks that could pay maybe like 5% dividends returns. Okay, so then that they will be earning 1.5%. And moreover, if we are seeing a stronger ringgit Malaysia, and that from the forex side, it will be another contributions to their returns as well. Okay, yeah, and also with more funds coming into markets, okay, we shall see an increase of the risk appetite for some of the high small caps and also high beta stocks. Okay, yeah. So if we look into the ringgit, the trend of the ringgit, we are seeing, we can see that as the change of the view of the potential rate cut, we are seeing our ringgit continue to strengthen. Okay, continue to strengthen, and it's moving towards the 4.1 mark, or even after the rate cut, we might see even stronger ringgit. Okay, yeah. So a stronger ringgit, it actually will benefit some of the companies. Okay, I believe that with a stronger ringgit since October, okay, we can briefly know, we can roughly know what are the companies that has been benefited from a stronger ringgit, okay, or some of the companies that have their borrowings in USD. Okay, yeah. So companies with important products, raw materials, raw mats, all these things, they will be benefited. Okay, yeah. So some of the counters that we have been looking into it, like consumer related companies, like Nestle, like 99 Speedmart, like Capital A, like Syme. Okay, all these are the companies that we have been looking into it in relations with the ringgit strength. Okay, but on the other hand, some of the companies that might have negative impact will be usually primarily focused on export related counters, like glove, like technologies, E&Es that has been exporting outside Malaysia, and especially if they are if US is their major export destinations, okay, they will be affected by the weaker USD. Okay, potentially have a weaker foreign gains. Okay, and on the other hand, commodities like palm oil, which has been selling in the ringgit terms wise, then we will have a weaker edge whereby like some of the traders in the market, they will be seeing, soybean with USD is cheaper compared to palm oil that I have to buy in ringgits that has been stronger. Okay, yeah. So these are some of the impacts that could be affected by the strength of the ringgit. On the other hand, like we say that if we really see the rate cut and also the returning of the foreign fund flow, okay, REITs could be one of them that could be benefited, especially if we look into some of the REITs, okay. Some of those that have been performing for this year, they had quite a steep retracement these few days, okay, in this week, okay. And if you look into the REIT index, is coming to the testing the 200 moving average levels, okay. Yeah, so if we put a Fibonacci retracement chart over here, the immediate support levels will be somewhere around at 900 levels for the Bursa REITs index, okay. Yeah, so risk is definitely something that's good to monitor very closely, and anytime we are seeing really the rate cut materialize and we are seeing more increasing fund flow into foreign fund flow into Malaysian markets, rates could be one of those that benefited, or some with higher dividends yield, like for example Maybank, that has been always having a good dividend yield, and also it's also the banks and with the resilience earnings, okay. Yeah, so if you are interested in REITs, these are some of the REITs that you can find in equities tracker from our platform, okay, whereby you can see you can find their dividend yield, and you can look and some of these marks are those dividend yields that's more than 7%, okay. But if you are focusing something that is more stable, you can focus on some of those with the high market cap, like KLCC, like IGB REITs, or even Sun REITs or Pavilion REITs, okay. So these four are the one that with a higher market cap, okay. And if you look into the dividend yield, it's actually not that bad as well, whereby IGB, Pavilion, and also Sun REITs, they actually have 4 to 5% dividend yield for a year, okay. Yeah, so not as the market is expecting for rate cuts, okay. Just now I highlighted there will be increased interest, increased risk appetite for those high beta stocks, okay. So we can see that it doesn't necessarily have to happen in Malaysia, okay. For those that who have been traded globally, okay, in Malaysia wise, the focus, it could still primarily focus on blue chips, focusing on those main markets, high cap stocks, because for the funds wise, Malaysian market is too small for them, whereby they cannot just go in, and the foreign funds cannot just go in and buy small cap in Malaysia, because it can easily dictate the movement, okay. So when foreign fund come in, they will still have to focus on the top 100 top liners of our KIC stocks, okay. But if you are trading globally, you can see that with the rate cuts expectation in their minds, okay, you can see all those that has been performing for the past 2 weeks since the change of the market expectation. Those that have been performing are those that's high risk one, higher beta, high volatility stocks that has been doing well, okay. That's why if you look into like S&P, like Dow Jones, especially Dow Jones, that have been just tracking the 30 blue chips in US markets, the trend, it wasn't as strong as S&P, or even as per if you're comparing to Nasdaq, okay. So with this rate cut expectations, it actually also increased the interest for all these high betas, okay. Yep. So throughout all this, we kind of have a more all-rounded understanding, more comprehensive understanding about what's going to happen if we really see a rate cut this week, okay, whereby some of these we might see in fund foreign fund inflow. Okay, we might see a stronger ringgit. Okay, and hence these are some of the impacts of on the ringgit related counters. We will be seeing some of the movements and also some of the blue chips and also high dividend stocks. Okay, so these are some of the categories, different type of stocks that we really want to monitor and follow closely if we having any of all this exposure in our portfolio or if we intend to engage any. Okay, so after this week, after the Fed's rate decisions, what will be coming up next? It will be more towards on window dressing. It will be more towards on Santa Claus Rally, okay, and it will go into like the festive seasons for the month of December, whereby we might see some of the vacations being taken by the funds managers. All this, okay, yeah. So it could be more quiet until the very last week of the year, whereby window dressing starts coming in. Okay, okay. So if we look into the window dressing wise, okay, these are some of the counters that from the blue chips index. Okay, yeah. Since we have been talking about if there is any foreign inflow, we really want to focus some of this. Blue chips, some of these top liners whereby foreign fund that might focus into. Okay, yeah. So if we look into some of these counters, the top market cap counters in the markets, we can see that in the month of December. So these are their performance. Okay, the performance of all these counters in the month of December for the past 15 years. Okay, yeah. So which are the counters that we really want to look into and pick for the year? Okay, yeah. So if you are one that's looking for better returns, okay, SIMW or SDG or NES or YTL are the two that performing the highest average. Okay, but do bear in mind that okay, for SDG wise, the data is only from 2017 until right now. Okay, but from here we can see that from 2017 until 2024, for the past 7 years, that is for every single year it has been performing. Okay, the worst is on 2023. It's just flattish. Okay, otherwise throughout the 7 years, the 8 years, it has been performing. Okay, after the restructuring. Okay, another one will be YTL. Okay, YTL. You can see YTL wise is pretty much more towards the extreme part, whereby it's either flattish or it's gonna perform. Okay, yeah. So you can see every time when it performs, it's like 20+%, 18, 17%, 17%. Okay, so December could be a very good month or a very quiet month for YTL. So if you are trading on YTL wise, especially YTL, I believe right now YTL is on a very steep downtrend. Okay, if you are interested in trading YTL, maybe this is a month that's good to look into YTL for potential rebounds in the markets. Okay, but if you are more towards a stable kind of traders, okay, you might want to look into Tenaga. Okay, whereby out of past 15 years, only 2 years that's it's losing, and another one will be Axiata. Okay, yeah, Axiata. Also another counters with just only 2 losing years. Okay, and if you're comparing Tenaga and also Axiata, definitely Axiata will have a better yield, whereby average is about 4.39%, and if you look through every year is like 5 to 6% kind of gains. Okay, whereby some of the years it might go up to 8%, 12%, or even 11%. All right, okay. Even the downside when it's down is just 0 point something percent or even less than 5%. So if for those who are who wanted to trade on window dressing strategy, one strategy that you can use is let's say for Axiata. By the way, all this data, they are based on the changes of the month. So what you can do is you can take based on the closing price. For example, Axiata, you can take the closing price for Axiata in in the month of November, okay, and then you project maybe like 10% away from that price as your stop loss, and then you are aiming for maybe like 5 to 6% from that area, okay. And of course, if right now asset price is much lower than that, then of course your downside risk is even lesser, okay. Yeah, so that's one way that you can strategize your strategy based on this window dressing strategy, okay. Yeah, so after besides window dressing strategy, okay, there's also another thing called Santa Claus Rally, okay. Basically, some of the traders in the market, they might confuse Santa Claus Rally and window dressing, okay. They are a little bit different in this two strategy, although the timeline is pretty much similar, okay, whereby Santa Claus Rally, it usually refers to the market performance during the last 5 days of the markets, okay, in the year, okay, whereby this year it will be on 26, 27, sorry, it will be 24th, 26th, 29th, 30th, and 31st, okay. Yeah, and plus the first 2 days in January, whereby for next year it will be on the 2nd of February, 2nd of January, and also 5th of January, okay. So what the market will usually do is they will see the besides trading, okay, where generally they believe during these 5 days, sorry, these 7 days, is there is a good chance of US market will be performing, okay, but it also a barometer to gauge what will be the performance for the next year, okay. If we are seeing a very positive performance from this Santa Claus Rally, okay, it actually set the tone whereby the year is starting with a good start, with a strong starts, and hence throughout the year we will be seeing a much stronger performance, okay, for the year. However, if we are seeing even the starting of the year has been starting in a week, then many fund managers, they will be really rather to be more conservative and focusing on specific stocks rather than just pressuring upwards, okay. Yeah, so they might focus on more strong fundamentals, more stable kind of stocks rather being too aggressive, okay. So that's the gist of Santa Claus Rally, whereby I believe as we are entering the month of December, this is good for us to look into as a benchmark for us, okay. Yeah, so besides window dressing, Santa Claus Rally, okay, and of course following the Fed's concluding their last interest rate decision for this week, okay, we really want to look very closely on who will be the next Fed's chairman, okay, whereby the market is expecting Powell to off from the chairman seats in the month of May, okay, for 2026. I believe it's somewhere around May, okay. So and early last week, Trump also has actually been hinting and also trying to hint that he has someone in his mind for the Fed's chief nominees, okay. Yeah, so it's up to US Treasury to pick who be the Fed's chair, okay. But definitely Trump will try to play a role in deciding that, okay. And so far, Kelvin Hassett that market is expecting, okay, to be the next one in line for the Fed's chair. And if that anticipation is, or that expectation is getting stronger, okay, we shall see market start to pricing in for a more rate cuts, and hence, like I said, even further weakening in the USD, and also a stronger ringgit, okay. Yeah, so if that's why I'm highlighting this here, is because if you have been positioning as what we has discussed earlier, then the development of who gonna be the Fed's chair, it gonna see where either push your portfolio, your exposure trades even more in profits, or if there is any change in the tones, okay, and we might see some snap back in the ringgit strength. Okay, yeah. So that's lead us to the sorry. Let this that would lead us to the very last seasonality of the month. Okay, the seasonality of the December. You can see for December seasonality wise is more towards January broadly is more positive. Okay, with only construction and healthcare they are briefly in slightly in losses. Okay, construction more towards flattish. Okay, but we can see that utilities, transportations and energies are at the higher sides. Okay, especially transportation, I would believe that although logistics transportation is not a very hot sectors, actively traded stocks. Okay, but some of the companies really forming a good uptrend like Shenyang, okay, has been performing. And if we look into some of the what's that index for the transportation index, it has been performing well. Okay, yeah. So transportation for some of the investor, okay, if you study into it and then you're investing into its transportation, it could be good to look into. Okay, meanwhile, utilities that has been selling down. Okay, been selling down since early November. Okay, and entering oversold stochastics in entering oversold stochastic over here very near to the zero levels. As we are approaching the month of December, that is a good chance for the rebound in the utilities related stocks like I mentioned just now, like YTL, like potentially Tenaga, especially after the hanging tax issue matter actually has pretty much concluded right now. Okay, and another one will be technology. Okay, but technology wise, technically, if we look into technology is much weaker than the oversold trend right over here is not as strong as utilities, whereby it's making small pullbacks and it seems like more trending lower. Especially right now, it's testing the 56 level right over here, which appears to be the immediate support. Okay, if it's this is so this few days is pretty much critical for the tech Bursa Tech Index. Okay, if it really unable to hold around this area and start bouncing off, then we might see more downside on the technology index for Malaysia's tech stocks. Okay, yeah. So that will be pretty much all for our section today. Okay, and if you really want to, if you want to know more on what's to prepare for the next year quarter ones, okay, besides some of the key events that highlighted just now, okay, you may join us for our 2026 Q1 market outlook on 7th January, Wednesday, okay, after markets at 5:30. Okay, during the section, our research analyst will be sharing with you. We will really cover in details what's their reading of the global economy, Malaysia economy, and the equities market outlook. What are the opportunities that will be lying for the year 2026? Okay, yep. So that will mark the end for our section for today. And thank you very much for joining our section. And if you have any inquiry or any questions that you would like to ask, okay, do feel free to scan this QR code or drop us a WhatsApp message at the number here below. All right, okay. So that will mark the end of our section today. Thank you very much for joining, and hopefully everyone will have a more fruitful month of December. Okay, thank you. Bye bye.